Welcome to this week's Nebraska Soybean Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff. I'm Steve White, and joining us on the program today, we have Arlan Suderman and Schroder, who are joining us. And what a week it has been. We had RVOs announced, the ethanol volumes announced on Friday. Talk of a China deal. Is it a framework? Is it a deal? What even is that? We've had immigration operations going on here in Nebraska at beef plants, escalation of things in the Middle East, and there was a WASD report. It seems like that's kind of gotten lost in the shuffle. A lot of things. We're going to hear from both these guys, get their thoughts on the things that have been making the trade move this week in just a moment. But first, a word from Nebraska soybean farmers and their checkoff.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the weekly market roundup. Austin and Arlan are joining us, guys. As we said a moment ago, a lot of things that have happened the last couple of days. Austin, let's maybe start with you. What's kind of your takeaway from the last 7 days of things that maybe have been influencing the trade?
Yeah, well, there's been a lot going on, obviously kind of more developing here in the last couple of days. We had a USDA report on Thursday that was kind of more of a yawner report. There was really no new big information out of that. You had here late, I guess, on Thursday night, the Israel sent a bunch of missiles over to Iran and kind of started a whole Middle East conflict that sent oil higher and some maybe added some premium to some of the other commodities as well. And then here earlier on Friday, we had a EPA announcement that kind of shot the bean oil market higher, a little bit higher RVO volumes than previously expected for that biomass diesel. And so kind of it was generally a supportive end of the week. That was, I guess, for the grains anyway, that was for the lack of a better term, kind of a quiet start that kind of ended a little bit more volatile.
And Arlan, from your perspective, what kind of stands out to you looking back at the last 7 days here?
Yeah, I think the overall uncertainty and while some commodities see some big opportunities ahead, like the soybean industry, perhaps others are saying, maybe our best days are behind us, like the protein sector, livestock sector. Not saying that they can't go higher, but we closed out the week certainly on a weaker note. Some of that was risk off move by the funds with big long positions. A lot of heavy hedging by feeders in both the cattle market and the hog market, but also a sense that, okay, we're getting close to the 4th of July barbecue weekend, and will there be enough demand to support prices at these levels once we get beyond that?
Arlan, let's stay with you for just a moment. Earlier in this week, we had this talk of China. The president says, we've made a deal. Now, I've looked, and I cannot find actually text of a deal, and I can't find anything that mentions anything related to agriculture. So what can we make out of what actually transpired there, and what do we still need to see happen down the road here?
We still don't have confirmation that President Xi Jinping of China has signed off on the deal either. It seems to be largely about rare earth minerals and getting those rare earth minerals going once again, flowing from China to the United States. Depending on the source and the calculations and who you believe, China now controls between 80 and 97% of the rare earth minerals in the world, and China has realized that that's a leverage tool. Most of the world, there are adequate supplies of rare earth minerals around, but for most of other countries, they're too dirty for us to mess with, so to speak. And so we leave it up to China to both mine and process those rare earth minerals, but we've become very dependent on the electronics, both from everything from cell phones to cars to our military equipment and missiles, in order for those that need those rare earth minerals. And now we're dependent upon China, and China's using that as a leverage tool right now. So outside of that, it was mostly about rare earth minerals, but also setting the U.S. tariffs at 55% and Chinese at 10% on top of the tariffs, other tariffs that they already have in place. So that still kind of precludes us sending a lot of grain and oil seeds to China. And I don't see us having any type of significant agreement in order to increase those exports anytime soon, unfortunately.
Yeah, and Austin, from your perspective, trade, it's just more volatility and uncertainty until we get some deals done. I mean, well, I guess what would you say about all that?
Yeah, the only thing I might add is that I think the trade, I guess, quote unquote, agreement or framework would be maybe generally supportive in the fact that the two are kind of easing the trade tensions, for the lack of, I guess, better phrasing there. But generally, still is you're not going to see much in terms of a business, especially if you're talking China. The big one would be beans, and you're not going to see much business similar to what you did last year, right? We didn't see any new crop buying until probably mid July, late July, and into August in terms of new crop export sales to China. So I wouldn't look for anything anyways anytime soon here. I think it might be a sign of easing tensions, but beyond that, I wouldn't look for much.
Yeah, maybe it's a sign, if things are thawing a little bit in that relationship, maybe that's the best way we can look at that. I talked to somebody just the other day who said this trade stuff, as a producer, they said drives them crazy with so much volatility. But best case scenario, maybe the country diversifies, maybe we get some more trade partners out of this. But Arlan, does China still have to be a part of that mix? Do we still need that? In terms of, even if we opened up a bunch of new places where we're not at now, do we need China, don't we?
Yeah, that's one reason we're developing the domestic demand via the biofuels, but still we can't build the biofuel infrastructure to absorb what we could lose if we would lose China's business all of a sudden. And that is a possibility. If you look at what's estimated China have in reserves right now, it's twice what it purchased from us this last year. And it's been ratcheting lower and lower what it gets from us each year. It basically goes to South America, buys all that it can from them, and then buys the rest from us. And as South America increases their production each year, that means that they get less and less from us. And I anticipate that'll continue. Just at what point do they just totally cut us off? We could get a trade deal at any point that would have them buying a lot more commodities from us in exchange for more favorable access to our massive consumer market. And that is a possibility, but I don't think we're anywhere close to such an agreement as that. I think that'll take considerably more time if that's going to happen.
And a moment ago, Arlan mentioned biofuels. We'll transition to that in just a moment, but just resetting things. I'm Steve White, and you are watching the Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff. Austin, when we look at biofuels, that is such an important market for us anymore. RVOs, those numbers now being set. What's kind of your takeaway? Anything that you can glean from that and what that means?
Yeah, well, it's definitely a lot friendlier than what I guess had been rumored here over the last few weeks or so. I think it was at 4.6 billion gallons, and EPA came out today and essentially set the proposed targets at 5.6, well above where everybody had expecting, and we got the limit rally out of it on the bean oil. That's helpful, and as Arlan said, we're going to need the domestic demand for or I guess from a bean standpoint, domestic demand is going to be a lot more attractive here, just from the aspect that Brazil is continuing to increase their bean production down there, and there's really no slowing them down for I guess a little while anyway, until beans maybe market themselves out. But we're going to need that domestic demand, and seeing that RVO increased, and along with some other other tools thrown in there with cutting the foreign feedstocks. All the imported feedstocks, I believe, receive about 50% of the credit, or half that credit. So that is definitely beneficial too, as keeping that used cooking oil out of the market, and such.
And Arlan, let's turn it over to you. When we look at in terms of soybean growers this year, when they got the crop in the ground, not a lot of optimism. Is this maybe a little bright spot, or is something that those guys, maybe they needed a little good news with this RVOs here?
Yeah, certainly so. Now, we don't have the total picture yet. We still need to see what the EPA will do with the small refinery exemptions that sit on their desk waiting for processing, and how aggressively they'll accept those exemptions. So the net between that and the RVOs will give us what actual demand is going forward. We hope we hear from that sooner rather than later, so we have a good handle on it. But we're cautiously optimistic that this is one way the Trump administration wants to help the ag industry, is via the biofuel program. We think there's more that they can do, but we're pleased with the trend that we see happening and developing right now.
Well, guys, we could go on all day talking about all the things that have happened. We've got to start wrapping things up. Austin, let's kick it over to you. Any other things you've been watching in the last week, and anything you're watching in the week ahead that people might want to be paying attention to?
Yeah, well, I think you got to keep an eye here, especially when we're in the growing season. We haven't talked much about corn, but from a corn standpoint, is the short position that the specs have in that market. And again, we're into that growing season. We're going to start trading weather a little bit more actively. And with that short position, the market is a little prone to some sort of short covering if we do get dryness in the forecast. We obviously haven't seen that, and the forecast looks a little bit wetter here, at least over the next week. So we have kind of maybe to wait and see what happens there. But the market is prone. We have some seasonal studies that we do that suggest there's a high set for some time in May, June, July time period for both corn and beans. So that's also something to keep an eye on here that we're watching.
And Arlan, what about you? Any other final thoughts? Anything else you've been watching that's notable over the last week, and anything you're looking ahead to?
Well, we were looking Thursday at the forward curves for feed and crush margins for both cattle and for hogs. And we're looking very, very good for the industry. Now, that's not enough to expand production of cattle. I mean, we still have trouble trying to get the breeding herd back, but it may mean if people were able to lock that crush in, lock in those cheaper feed prices, as well as lock in the fat cattle prices, which a lot of them were, then that may mean feeding a little bit longer, putting on a little bit more weight, utilizing a little more feed. And on the hog side, may even stimulate some expansion of production and consuming more feed. So that's positive from a feed consumption standpoint. Friday, we saw the big selling. Part of that, again, reflecting the heavy hedging activity as they locked in those crush in addition to some speculative selling. But there's still some opportunities there. And I think that feed demand is going to remain strong. Export demand has been better than expected as well. So that's really a positive.
Well, it has not been a dull week by any stretch of the imagination. Plenty of things happening. Big thank you to our guests, Austin Schroder and Arlan Suderman. As a reminder, trading certainly involves risk of loss and is not suitable for all investors. Well, that is this week's weekly market roundup. Thanks for joining us. Brought to you by Nebraska soybean farmers and their checkoff.